everybody. This video is going to be about closing costs and the 3 ways to get creative when paying closing costs. So you finally found your dream home and you feel like you're ready to start down that road towards home ownership. It's super exciting time, but with so many fees and payments, you start to wonder if you're really ready as a buyer. Do you have the funds to cover all the costs, or should you wait a little bit longer before purchasing a home? Well, the good news is you don't have to wait. You got a few options as a buyer for paying closing costs, and it helps to understand, of course, what's included in closing costs and how they can be paid. So I thought I'd make this video. So first of all, what are closing costs? Well, closing costs are the extra expenses beyond the home's purchase price. The costs generally range from 2 to 5% of the loan amount. Closing costs usually include origination fees, property taxes, escrow, appraisal fees, and more. Closing costs vary according to your area and what lender you choose. So then you wonder, how are they calculated? So they are determined by a combination of third-party expenses and lender fees. They're set fees for things like an appraisal or inspections, as well as adjustable fees that depend on whether you're paying for points or how many days of property taxes need to be collected according to your closing date. Okay, and you can get a loan estimate of your closing costs when buying a home to get a general sense of your total fees. When you apply for a loan, the lender will provide you with a loan estimate of your closing costs within 3 days of your loan application. So you'll know ahead of time how much your costs may be. Then you'll receive a final closing disclosure before the loan closes that lays out the final amount. So now that you know what they are, how do you pay for closing costs and get the ball rolling on home ownership? Fortunately, there are options for paying for closing costs, so you can determine what will work for your particular situation. So here are your options for getting creative with paying closing costs on your mortgage loan and what to keep in mind for each choice. Number 1 is paying for closing costs up front. This includes any type of loan. You can just choose to pay for your closing costs out of your own pocket at closing, usually with a cashier's check. This will keep your loan rate intact, and it will avoid increasing your mortgage to cover the costs. Okay, so this means lower payments, but depending on the loan amount and the additional fees, this may be money that you could better use by investing or covering the costs of moving into your new house. So we'll keep those in mind when we go over and review which one's best for you. The second option is rolling the closing costs into your loan. This includes FHA loans, but not VA loans. So you can choose to roll the closing costs into your new mortgage loan so you don't have to come up with additional funds at settlement, which is closing. This will be less of a burden financially to you now, but it will increase your mortgage amount and the monthly payments a bit, as well as increase your loan to value ratio. So we'll keep those in mind. And the third one is have your lender pay the closing costs. This includes both FHA and VA loans. You can choose to have the lender pay the closing costs. This is known as a low cost or zero closing cost loan. Choosing this option saves you the extra funds now and doesn't increase your loan amount. These loans typically do have a higher interest rate, which means slightly higher monthly payments. So when you're saving up money to purchase a home, keep in mind that there are a few possible expenses to plan for. These include the down payment, closing costs, moving expenses, and your first couple months of mortgage payments. So don't be overwhelmed by all these expenses. You have ways to keep these costs lower. For example, the down payment. This could be lower than you think depending on what type of loan you choose. Like I mentioned before, you can decide to roll closing costs into the loan or have the lender pay them. The next thing would be the moving expenses. You can lower these if you round up family and friends to help you do with most of the cleaning, prepping, and packing and moving yourself. And then, of course, the mortgage payments themselves. The first month of your new mortgage, there'll not be a mortgage payment due. So you'll have a little extra time to build up the next mortgage payment ahead of time. So see, it's always good to have options. And now you know you have different ways to cover your closing costs. As your loan advisor, it's my job to help you consider which option will fit your situation best. And this is one of the many ways that I help you to become a buyer. So please reach out if you have any questions, and I look forward to working together. Thanks again.